until now.
More than just business news, we're news for business people.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup. So if you're looking at the markets, expect a big gap up opening because the SGX Nifty is indicating a 60-point gap up opening in trade. So we are inching close to the 10,300 mark in trade. Now, if you're looking at what the ADRs did, ICICI Bank, Vedanta, they fell in almost 1.5 to 2% each in trade, and HDFC Bank was almost 1.3% lower. What did well was Dr. Reddy's. Dr. Reddy surged over 2% in trade. Now, as far as commodities are concerned, first let's start with crude. They snapped the two-day drop, trades higher in early morning trade. It's up over 0.5% in trade currently. Yesterday it ended down almost 1% given the fact that US crude output is trading at record highs. So that's the view that's coming in on crude. Base metals ended mixed on the LME. Three metals were up, three metals were down. So copper, lead as well as nickel were trading higher. What was not doing well was counters like tin, aluminium as well as zinc, and they were down in trade. Now, as far as commodities in China is concerned, they have opened muted, but they have managed to rally now. Rubber is now up over 2.5%. It was up almost 1.8%, but the rally has been very strong in rubber. Aluminium is also trading much higher in today's trade. So that's the view that's coming in. Copper is also trading much higher. So commodities in China have started to rally of late. The other factor is gold. Gold is trading muted post a two-day surge that we've seen. Now, as far as fund flows are concerned, FIs were net sellers to the tune of almost 580 crores in the cash market. DIs were also net sellers to the tune of 116 crores. But overall, on the month-to-date basis, FIs have been sellers to the tune of 2,700 crores, and DIs have been net buyers to the tune of almost 4,300 crores in the cash market. As far as the market is concerned, the VIX was up 5% higher since the market was trading lower. Nifty falls for the second straight day. It was down by almost 47 points, and what contributed to the fall in some of the sectors, real estate, PSU banks and pharma were the sectors that were affected most as far as the Nifty was concerned. Now, as far as Nifty overall is concerned, 47 points down on the Nifty, mainly led by banks. So ICICI, HDFC, SBI, all these counters were down in trade. So that's the view on the market. But Agam, what are the FNOQs indicating?
Well, more writing when it comes to calls, considering the Nifty's fallen, come off around below the mark of 10,200. There's been very little change in the indices, or for that matter, when it comes to the change in open interest. That's as far as the Nifty is concerned. The Bank Nifty, in fact, has seen virtually no change at all when it comes to the open interest. The index, of course, itself is down by as much as 0.5%. The VIX, that is the India Volatility Index, has moved up around 4.5%, despite the fact that we've seen very little change in the indices. But when it comes to your put call ratio, again, predictably, no change, standing at around 1.25 there. In terms of changes in open interest, what we're looking at is more writing the 10,500 call, and this is where we're looking at some amount of resistance building in. On the other hand, unwinding in the 10,000 put. So we'll be watching out for these levels. In terms of stocks, we're watching out for Shree Cement, which has seen a surge. Of course, this is largely owing to news, positive news flow coming in for Shree Cement, because of which we're looking at fresh longs building in. On the other hand, fresh shorts building in for Muthoot Finance, where the stock took a knock of around 4.3%. So we will be watching out for these stocks in trade. But this is as far as your markets go. In terms of what's happened in the US, the Federal Reserve raised interest rates on Wednesday and left its rate outlook for the coming years unchanged, even as policymakers projected a short-term acceleration in the US economic growth. Let's go across to Bloomberg's Kathleen Hayes for all the updates.
Let's start with the Federal Reserve because, yes, they wrapped up 2017. They wrapped up what is the beginning of the end of Janet Yellen's term as Fed chair with the rate hike they have signaled for some time now and signaled 3 more coming in 2018. Let's jump right to the terminal to look at dots go, DOTS go on the terminal. Here is 2018. Here's the same consensus we saw before the Fed updated its summary of economic projections at its meeting that ended on Wednesday. 6 voters clearly aligned for 3 rate hikes, but you can see there's a bit of dispersion. Some see maybe 4, some see fewer. Now, the Fed, in its policy statement, and in their in this summary of economic projections, they boosted their GDP forecast a bit for 2018 and 2019. They continue to see a medium-term inflation rise, regardless of what happens to tax cuts, is almost what Janet Yellen said at the presser, her last one as Fed chair earlier on Wednesday.
In a strong labor market where many firms are having difficulty finding qualified workers, we would expect just through normal demand and supply channels to see some upward pressure on wage growth over time.
Already, and in fact, she does expect the labor market to remain strong, she said later in the press conference, and that's going to eventually boost wages. Well, it better, because take a look at hashtag BTV711. Inflation's got a long way to go to hit that 2% target. Here's the Fed's key measure, PCE core, up to 1.4. Long way from the yellow line, that's 2%. In fact, the past year, mostly, it's gone down. Now, core CPI, Consumer Price Index, not the Fed's main gauge, but watch closely because it was starting to rise. Oops. Until November, it went down to 1.7 year over year. What does that tell you about the trend and the difficulty of getting to 2%? This is why there were 2 dissenters at this meeting. Charles Evans from the Chicago Fed, Neil Kashkari from the Minneapolis Fed. Charlie Evans has said, hey, what's the hurry? We could wait till the middle of next year and see if inflation is finally making that move toward the yellow 2% target that I just showed you. Neil Kashkari has been saying basically the same thing. In fact, he said rate hikes are sending the wrong signal. They're pushing down inflation expectations.
Back to local equity markets, amazing set of numbers coming in from Pratap Snacks. If you look at the revenue, that's the top line, that's risen almost 12% on year-on-year basis. In this quarter, had a number of around 262 crore as compared to 234 crore. Net profit has risen more than 2.5 folds to a number of 13 odd crore as compared to 5.3 crore that we've seen in the corresponding quarter. Well, EBITDA for that matter has clocked a 4-fold jumps at a number of 25 crore as compared to 7 crore that we've seen in the corresponding quarter. Margins have tripled to 9% as compared to 3% that you've seen in the September quarter of the last year. So what has led to a good set of numbers will be your higher revenues and also the cost saving techniques. Now your raw material as a percent to your overall sales has come down. That expense has come down to around 65% as compared to 73% that you've seen in the base quarter. However, net profit for that matter is a little lower as compared to that of your operating profit because of your higher depreciation and also dip coming in on other income. Other income has declined by 33% to a number of 45 lakh, whereas your depreciation that has shot up to a good 9% to a number of around 7.12 crore as compared to 6.5 crore. And finance cost, however, finance cost for that matter has come down by 57% to a number of 80 lakh as compared to 2 crore that we've seen in the corresponding quarter. Also higher tax outgo. That is one bit which is also ate into the operating into the bottom line performance of the company. Nevertheless, it's a good show from the company. Just to give you a little rundown about what the company is, it's a snack food company with a market capitalization of around 3,000 odd crore. Just got listed back in September 2017, got an overwhelming response, subscribed 47 times, and almost got listed to a premium of more than 30% from its issue price. But then do bear in mind the fact that stock hasn't gone much, after being at a premium, after being listed at a premium of over 30%. With that, we'd like to toss it over to Jayesh for commodity market updates.
Thanks for that, Nikki. Let me start off with the oil prices, which actually declined 1% overnight, backed by some strong inventory data that came in from the US. So the US crude output actually rose to a record high, whereas the gasoline inventory was up for 5 straight weeks and came in at about 226 million barrels. The US inventory for crude came down as much as 5 million barrels, but that did not meet expectation. The API, the EIA was expected to report about 7.3 million barrel decline for the last week. Also, we have a comment from OPEC in which they say that oil markets are likely to rebalance not until late next year. So we'll have to wait and watch how the entire oil market actually plays out going into 2018. Moving on to the precious metal space, gold actually gained on the back of the Fed outlook and also a slump in the dollar index, which declined to a 3-week low. Now, the Federal Reserve officials have stuck to their 3 rate hike projections for the coming year. Moving on to the base metal space, we got mixed cues from the London Metal Exchange, where the index itself closed positive, but just marginally was up about 0.4%. Copper was up 1%, which was actually the best performer on the London Metal Exchange. Tin was down about 2%. Which was the worst performer over there. Nickel and lead, the other base metals, gained, while aluminium and zinc declined. Now, we are seeing positive cues come about from the Shanghai Futures Exchange, where most of the base metals are trading with a positive bias. However, Shanghai steel has declined 2 days in a row and is down about 1%. The other commodity which is doing well in Shanghai is the rubber futures, which is up about 2.5%, and also copra prices at Cochin surged as much as 4% overnight and have gained about 77% for the year. That said, let's shift to Saloni, and what cues are you picking up from the currency space?
So Jayesh, I'll talk about rupee, how it fared yesterday. It ended with marginal losses of 4 paise at 64.44 levels against the dollar. Now, what surprised the market was India's current account deficit. It narrowed to more than estimated in the last quarter. The shortfall was around $7.2 billion in July to September, as compared to a median estimate of $8.2 billion, which was estimated by a Bloomberg survey. Now, this could help rupee in today's trade. Now, NDF markets are confirming the strength in the rupee, as it now trades around 64.30 levels against the dollar in the non-deliverable forward market, which is again 15 paise higher than yesterday's closing level. Now, on the global front, the Fed delivered its 3rd interest rate hike in 2017 yesterday, and reiterated its intention to hike 3 times again next year, that is in 2018. Now, what's interesting is that dollar index dropped as much as 0.7% yesterday after consumer price data came in lower than estimation, thereby citing concerns for further rate hikes by the Federal Reserve. Now, elsewhere, broad weakness in dollar actually pushed euro and pound higher as much as 0.5%. Now, all eyes will be on Bank of England and European Central Bank policy meeting today. Both the central banks are expected to leave their interest rates unchanged, thereby making it a non-event for overall currency markets. Now, moving on to the bond market, the yield on benchmark 10-year bond ended little changed at 7.17%. Now, do remember that it jumped to an intraday high, as well as highest level since July 2016. It jumped to 7.25%. Now, lastly, global funds reduced their rupee debt holdings yesterday for the 2nd consecutive session. They reduced their debt portfolio by approximately 480 crore according to NSDL data.
Well, amongst the stocks that we're tracking today morning is IndusInd Bank, where RBI has imposed a penalty of 3 crores on the company for non-compliance of income recognition and asset classification norms. Now, this penalty pertains to an inspection of the financial position for FY16, where the bank had reported huge divergences. In fact, the results of RBI's risk-based supervision for FY17 are not yet out, and the possibility of some divergence remains there as well. In fact, while the monetary impact of the penalty is negligible, analysts believe that this could act as an overhang on valuations. Remember, RBI had also imposed similar penalties on Yes Bank and IDFC Bank earlier, to some extent raising doubts on the quality of asset quality reporting for private banks. But that apart, we're also tracking Corporation Bank, where RBI has placed the bank under prompt corrective action framework. In fact, they've said that this is because of the high NPA and the requirement to raise capital. Now, the bank's net NPA as of September 30th stood at 10.24%, and the bank's capital adequacy ratio stood at 10.23%, the Tier 1 ratio at 7%. So we could see some negative reaction coming in there, but it's the 8th PSU bank which has been placed under RBI's PCA framework. And after reports which suggested that automakers are offering steep discounts in the month of December, you have a PTI report which is now saying that Maruti will raise vehicle prices by up to 2% from January. We're also tracking a couple of smaller names like Manpasand Beverages, where RBI has increased the FI investment limit from 24% to 49%. So we could see some positive reaction coming in on this name. We're also tracking PVR, which has signed a strategic deal with CJ 4D Plex to launch 16 new 4DX screens in the country. And that apart, on the back of fundraising, also keep an eye out for NCC, where it has received a board approval to raise up to 550 crores. That apart, we're also tracking V2 Retail on the back of bulk deal yesterday, where Goldman Sachs bought 2.8% stake. 3 individuals who held 2.95% stake each in the company have sold some stake yesterday, which includes Naresh Bhargava, Vivek Lodha and PC Manot. So that's a stock to keep an eye out for. And lastly, on the back of earnings, we're tracking Bodil Chemicals. Weak set of numbers coming in. Revenues fell 23%, while net profit for the company dipped 28% to 28 crores, while EBITDA came in 18% lower, and EBITDA margin came in at about 16.6%. So those are some of the stocks you should keep an eye out for.
See, we have a storage facility which is underground, and there are 4 bays, and 3 are robotic bays, and 1 is a carton storage bay. The fire has started in the carton storage bay. We have reasons to believe because of electrical short circuit. And that's the bay where, because the entire building is engulfed with smoke, the firefighters are also unable to go in. But they have been continuously pouring water since the fire started.
So since these are sensitive documents, one thing that I would like to understand from you is that why water only for the fire? Wasn't there any other way of dousing it, as in removing the oxygen inside the compartment or something else that could have done? Because I understand that water could spoil these documents.
Important documents are stored in compactors and metal bins. These are only records. Okay. And these records are stored depending on what the client requires. So carton storage is a normal storage for transactions as well as documents which are regulatory required to be stored.
Tata Communications will be in focus because the board yesterday approved the demerger of the surplus land, transferred it to Hemisphere Properties, which will be listed at a later date. Now, as per the transaction, why was this deal done? Because in 2002, when the entire deal was signed between Tata Communications and VSNL, it was required that the surplus land be transferred into a separate company and listed later. So that is why this entire thing will be done. Who are the beneficiaries? 51% benefit because of will go to the government, 25% to the Tata Communications shareholders, 20% to the erstwhile minority shareholders who tendered in VSNL, and 4% will go into the Tata Group. Now, as far as the land valuation is concerned, a lot of brokerages have come out with notes, and it varies from anywhere between 175 rupees on the lower side, which is Motilal Oswal, to as high as levels of 300, which Morgan Stanley has said. But most of the move has come in because the company had initially initiated that they are doing this process, and probably will be reflected in the share price. But what are the benefits for Tata Communication? As a company, it does not get benefit. It is the minority shareholders that get the money on this because of this. It's a 1:1 listing that will happen, and the move will remove the restriction on raising the funds for equity for Tata Communication. So that is the benefit that has. But expect Tata Communication to open gap up in today's trade.
Well, India's largest homegrown e-commerce giant, Flipkart, has brought back $100 million worth of employed stock options, making it to be the largest share repurchase program by an Indian startup. Now, according to Flipkart's statement, about 3,000 past and present employees of the Flipkart group, which includes Flipkart.com, Myntra, Jabong, and PhonePe, participated in the share repurchase program. Now, this is also Flipkart's fourth buyback program in the last 5 years. Now, the stock option is usually considered one of the attractive methods to retain and hire fresh talents in the company. Earlier this year, about 47 employees of online payments firm Paytm sold their stock worth rupees 100 crores to both internal and external buyers. Now the Flipkart's repurchase program comes after it raised around $4 billion in its fresh investment, out of which $2.5 billion came from SoftBank Vision Fund and about $1.4 billion came from China's internet conglomerate Tencent Holdings.
Well, some more stocks to watch out for based on the delivery volume as of yesterday. First up, we have Shree Cement. The stock was up 3% yesterday and saw delivery buying in excess of 275 crores. The delivery volume surged more than 4 times at about 1.5 lakh shares versus the 10-day average. And the total volume also surged more than 350% at about 2 lakh shares versus the 10-day average. Sun TV, the other stock to watch out for, mind you that it did come off the day's high, ended the day higher by about 3%. Delivery value was about 70 odd crores. The delivery volume nearly doubled at about 7.5 lakh shares as compared to its 10-day average, and the total volume surged nearly 3 times at about 42 lakh shares as compared to its 10-day average. Cadila Healthcare, the last and final stock, it was down 2%, saw delivery value in excess of 50 crores, and the delivery volume was up more than 120% at 13.5 lakh shares versus the 10-day average, and the total volume also surged about 75% at about 19 lakh shares versus the 10-day average.
So on brokerages, first up we have Motilal Oswal on Oberoi Realty. Now they have initiated coverage on the stock with a buy rating and a target price of rupees 580, which suggests a potential upside of approximately 28% from the current market price. Now Oberoi Realty is a Mumbai-focused premium real estate developer with presence in residential, commercial as well as hospitality segments. Now the sharp focus on delivery of quality products have actually helped the company create a strong brand over the past 20 years. Now Motilal believes that the company will be a key beneficiary of the consolidation phase which is currently going on in the real estate space post RERA implementation. Also, company's recent foray into affordable housing should help it enjoy some tax incentives according to the note. They believe that company's low debt levels could actually provide ample room to acquire more land properties in Mumbai, and hence they expect its revenue and net profit to grow at a CAGR of 47% and 56% over the next 3 years. Now they also expect strong cash flow visibility for the company for the next 10 to 12 years from their ongoing as well as planned projects. And according to Motilal, the bull case target price for Oberoi Realty stands around 638 rupees. Now on brokerages, second we have Credit Suisse on S-Chan. Now they have initiated coverage on the stock with an outperform rating and a target price of rupees 625. S-Chan is the largest player in publication market in India with a strong track record. It is a leading player in the attractive Indian education content market, and hence they expect revenue, EBITDA as well as EPS to grow at a CAGR of 14%, 13% and 25% respectively over the next 3 years. Now they expect the lower borrowing cost for the company will actually accelerate the EPS going ahead, while large and young population in India, growth of private sector schools as well as increasing share of education in the consumer discretionary budget remains some of the key positives for S-Chan according to Credit Suisse note.
But there's a lot to talk over the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. Voting for the second phase of the crucial Gujarat Assembly polls will be held today after a high-voltage campaign witnessed Prime Minister Narendra Modi and Congress President-elect Rahul Gandhi leading the electioneering for their parties. Canada's largest pension fund doesn't expect institutional investors to bet on Bitcoin anytime soon, saying they would wait for a few years before taking the plunge. And the government has extended the deadline to link biometric identification Aadhaar and permanent account number with bank accounts and other financial services to 31st March 2018. And with that, it's a wrap on this edition of All You Need to Know. Up next is Indian Open.